History of money, from barter to Bitcoin. What is money? Imagine a world where everything you own has been exchanged for something else. What if all you had were the things you could barter? No banks, no paper money, just goods and services traded among people. This is where our journey begins, the creation of money. The first trade, the barter system. Long before money existed, humans traded goods directly through the barter system. This method was based on mutual needs, one person offering something in exchange for something they needed. But it had limitations. The flaws of barter. The need for a universal medium. Barter worked, but it wasn't perfect. What if you had something I didn't need? Or what if I wanted something you couldn't offer? The limitations were clear. This sparked the need for something that could be universally accepted and easily traded. The birth of commodity money. Humans started using items of inherent value, such as cattle, shells, and salt, often referred to as commodity money. These were items people already valued and used in daily life. But even this had its flaws. The first coins, a turning point. Around 600 BCE, a breakthrough came in the kingdom of Lydia. They introduced the first standardized metal coins made from electrum, an alloy of gold and silver. This was a game changer in trade, as these coins were durable, portable, and easy to use. The spread of coins and their global influence. As the Lydians coined money, their innovation spread across the ancient world. Greece, Rome, Persia all used coins to trade. These coins represented a shift in global economies, and with them, the possibility of large-scale commerce. The rise of paper money in China. In China, around the 7th century, the Tang dynasty introduced paper money. These were promissory notes backed by the government that could be exchanged for goods. But while revolutionary, paper money was met with skepticism and fear. The problems with paper money. As paper money became more widespread, governments began printing too much, leading to inflation. People lost trust in paper as a form of currency, and the consequences were dire. In some cases, the paper money became worthless, and people returned to bartering. The development of banking systems. With the rise of trade came the need for financial institutions. Ancient banking began in Mesopotamia around 2000 BCE, where temple priests would store deposits of grain and silver. These banks were the first systems to manage money and facilitate loans. The role of banks in medieval Europe. In medieval Europe, the banking system evolved. Families like the Medici in Italy began to lend money, charge interest, and even issue promissory notes, essentially laying the groundwork for modern banking systems. The emergence of central banks. By the 17th century, countries began establishing central banks to control monetary policy. The Bank of England, founded in 1694, became the model for central banks worldwide, giving governments the power to issue national currency and manage the money supply. The gold standard, money backed by gold. In the 19th century, nations like Britain and the US adopted the gold standard, where their currencies were directly linked to a fixed amount of gold. This provided stability, but also created limitations on how much money could be printed. The end of the gold standard. In 1971, the U.S. officially ended the gold standard, severing the dollar's link to gold. This move allowed the U.S. to print money without any physical backing, leading to the era of fiat money. The rise of fiat money. With the end of the gold standard, paper money became fiat currency, money that holds value not because it's backed by a physical commodity, but because people believe it does. This shift changed the way economies functioned, allowing governments to print more money. The birth of electronic money. In the 1980s, electronic money emerged with the advent of credit cards and electronic funds transfer. This allowed people to move money without physically exchanging paper, ushering in a new era of convenience and global connectivity. The rise of online payments and e-commerce. With the explosion of the Internet in the late 1990s, online payment systems like PayPal emerged, enabling people to buy goods and services from anywhere in the world without physical money. The emergence of cryptocurrencies. In 2009, Bitcoin introduced a new form of money, cryptocurrency. It wasn't controlled by any central authority and used blockchain technology to allow secure, decentralized transactions. Bitcoin's rise sparked a revolution in how we think about money. The future of money, central bank digital currencies, CBDCs. Central banks around the world are now exploring their own digital currencies, called CBDCs. These government-backed cryptocurrencies promise to combine the benefits of cryptocurrencies with the stability of traditional fiat money. The rise of fintech and mobile banking. In the 2010s, smartphones transformed how people interacted with money. Mobile banking apps allowed users to send, receive, and save money without ever stepping inside a bank. Fintech startups like Revolut, Venmo, and M-Pesa made financial services accessible to millions, especially in developing nations. Money was no longer just digital. It was now mobile. The age of contactless payments. Soon after, contactless payments became the norm. Tap-and-go cards and digital wallets like Apple Pay and Google Pay eliminated the need for physical cash or even a PIN. Payments became nearly invisible, fast, frictionless, and integrated into daily life. The decentralized finance (DeFi) movement. As cryptocurrencies evolved, a new ecosystem emerged, DeFi, or decentralized finance. Built on blockchain, DeFi platforms allow users to lend, borrow, and trade without banks or intermediaries. It's a financial revolution challenging the centuries-old dominance of centralized banking. The metaverse economy. With the rise of virtual worlds and the metaverse, money took yet another form. People began buying virtual land, clothes, and experiences using digital currencies. From NFTs to in-game economies, the concept of value became truly borderless. The future ahead. AI, quantum, and the next evolution of money. Now the next frontier is unfolding. AI-driven finance and quantum-secure currencies. Artificial intelligence is optimizing investments and detecting fraud, while quantum computing promises unbreakable encryption and lightning-fast transactions. The evolution of money isn't ending. It's accelerating.